Have you ever wondered what was a better mortgage for a first-time home buyer, conventional or FHA? Well, in this video, I'm going to discuss the advantages and disadvantages of both FHA and conventional financing. So let's get started. So first thing is, what's the difference between FHA and conventional? Well, FHA, which is the Federal Housing Administration, which is also a government-backed loan. So FHA is backed by the government. So with FHA financing, you can go as low as a 500 credit score. However, you need to be putting down at least 10% for a down payment. In order to get to the 3.5% down payment for FHA, you must have a 580 credit score or greater. Obviously, you want to have the best score that you could potentially have, but a 580 will get you in the door with FHA with 3.5% down. And if you have 10% down that you want to put and you have a 579 or lower down to 500, that will allow for you to potentially qualify for an FHA loan. With FHA, the optimal goal is probably to be somewhere between a 620 and 640. But once again, the lower score, depending on if you have assets, which is money in the bank or retirement account, or some way to have cash to put down, or reserves. Reserves are 1 month of the payment, mortgage payment. Example, if the mortgage payment was $1,000 a month and it says that you need 2 months reserves, you need to show $2,000 in the bank after you've paid your down payment and your closing costs. Now that we've talked about some of the basic of FHA, let's talk about some of the benefits to FHA. So with FHA financing, it will allow for you to have a higher debt to income ratio. What debt to income ratio is how much money does the borrower have coming in on a monthly basis? How much does the borrower have going out on a monthly basis? You'll hear it referred to in this video or in videos that I say that I do as DTI, or you may hear it from your lender as DTI. DTI equates to debt to income ratio. FHA also will allow for more lax guidelines. So if you potentially have some lates on your credit, it's more likely that you can get approved with an FHA mortgage than you can with a conventional. FHA allows for you to purchase a 1 to 4 family. So if you're looking to purchase a 2, 3, or 4 unit, better known as a duplex, a triplex, and a quad, and you as the primary resident, meaning you're going to live in one of those units, FHA will allow for you to purchase that unit with 3.5% down, as long as one of the units are available for you to move in as the homeowner. Also, a bonus is they will allow for you to utilize the projected rents for each one of those units. That's a way to get into a property and earn some additional income, but you do not want to go to your lender and ask for an investment loan using FHA. That's not what it is. It's an FHA primary loan that will allow for you to purchase up to 4 families. Now, FHA also, an advantage of FHA, it allows for you to have a non-occupant co-borrower. Example, if you're looking to purchase a home and your income is not sufficient, or you have too much debt, which means your income isn't sufficient to qualify for a house or the house that you want, you have the ability to get something called a non-occupant co-borrower. A non-occupant co-borrower is where you have someone who does not plan on living in the property, but they have the credit score and the income to help you qualify for more home. It can be your spouse. Let's say your spouse is living in a different state and you're moving to a different state, and then they're going to continue to stay where they're at for a while until you get settled. You're allowed to do a non-occupant co-borrower that way, as well as your parents. With FHA financing, the seller is allowed to contribute up to 6% of the closing costs. That means the seller is allowed to contribute up to 6% of the buyer's closing costs. That does not mean that they have to pay the 6%, but they have the ability to contribute up to 6%. FHA also allows for more programs such as down payment assistance program. So in my experience, more down payment assistance programs work along with FHA financing versus conventional. So that FHA has more options. So it's potential that you can get into an FHA home with no money down as a down payment if the down payment assistance program is approved and can work along with FHA. Another benefit to FHA financing, you do not have to be a first-time home buyer. If you've utilized FHA once before in terms of purchasing a home and it's been some time, or you no longer have the FHA loan, you do have the ability to reuse the FHA loan. Now, the disadvantage to FHA financing is it's owner occupant only. So you can't purchase any investment properties with FHA. FHA also has something called upfront mortgage insurance. Mortgage insurance is 1.75% of the sales price, which is typically added into your loan. So after you have your sales price, they take the 3.5% off for the down payment that you're going to bring to the table, or if it's going to be given by a down payment assistance program. Typically, the upfront mortgage insurance is put on top of the loan amount, which makes your loan amount a little bit higher than it would have been if you paid it off. Also, alongside of the mortgage insurance up front, they also charge a monthly mortgage insurance premium. So the monthly mortgage insurance premium is 0.08%. So essentially, it is $850 per year of every $100,000 that you borrow, which is also broken up into 12-month payments. It's about a $70 a month payment per $100,000 that you borrow. That is for the life of the loan, unless you put down 10%. If you put down 10%, the mortgage insurance only has to stay with the loan for 11 years. And if you want to get out of your mortgage insurance prior to, you can refinance your house into conventional financing. So let's get into conventional financing. With conventional financing is typically backed by two entities, one called Fannie Mae, one called Freddie Mac. To get into a conventional loan, the minimum credit score is a 620, and typically their debt to income ratio is maxed at 45. Unless you have great assets and a good credit score, that debt to income ratio, or DTI, can be expanded up to about 50%. A benefit of conventional financing is there is no upfront mortgage insurance. However, you do have monthly mortgage insurance. Contrary to what people believe, conventional financing has a lower down payment requirement than FHA. Conventional financing, conventional loans can start at as low as 3% financing. And if you put down 20% on a conventional loan, you do not have to pay mortgage insurance. Along with not having to pay mortgage insurance, if you don't put 20% down with conventional financing, another added bonus is you have the ability to pay a lump sum for the mortgage insurance, and then you no longer have mortgage insurance in your payment. Conventional financing can be used for a first-time home buyer, primary residence, as well as an investment property. So you can utilize conventional financing to buy a second home or an investment property. Conventional financing also allows you to have up to 10, count them, 10 loans at one time that are all conventional financing, where FHA will only allow for you to have one, possibly two. So some disadvantages to conventional financing: they are more strict on the guidelines. They like to see a much better looking credit profile. They also, the 620 credit score is a little bit higher than the 580 credit score that FHA requires. They like to see more seasoned credit. So if a borrower had a 650 credit score with FHA and conventional financing, because of conventional financing wanting to see a more seasoned credit report and a better looking credit report in terms of no lates and different things, that same borrower could get qualified for FHA with no problem and could not get qualified with conventional financing. So conventional financing is a little bit more conservative. Conventional financing typically has a higher interest rate than FHA, VA, or USDA because it's not a government-backed entity. So the government offers lower rates in most cases than conventional financing. If you find this video helpful, you definitely want to check out my FHA loan video as well as conventional financing as we dig deeper into how to get qualified for those two loans. And if you have student loan debt, you also want to check out my FHA video on how to qualify for a mortgage with student loan debt using FHA as well as conventional financing. We have a Facebook group. The link is below. Please join to get some great information. You can ask me questions there. We also have a free home buyer's guide, free to you, by clicking on the link below, and you can get a free copy downloaded or emailed to you. And do me a huge favor. If you found this video helpful, please do me a huge favor and like it, subscribe, share it to friends who are interested in purchasing. And if you have any questions pertaining to this video or have any comments, please comment below. I do respond. I'm Kevin Jefferson, the People's Lender. Have a great day.